Welcome to Bunnex Investment Group. In this video, we are going to talk about one setup, an intraday setup that will definitely make you money. So we are definitely going to move from counting of levels, intraday check, and then where to make an entry. Be sure to stay with us up to the end of this video so that you fully comprehend. Without wasting much of your time, let's actually jump into the video. So the first step whenever we are given any tradable instrument or any asset is to count levels. Counting levels is actually a method that gives us the market bias, where the market is actually moving towards and where we are expecting to see the trend go. So basically, when the markets are moving, the market makers are there to disturb the trend so that you get confused. If you have been following this channel, you can check our previous video where we talked about the USD index, and on the USD index we actually talked about going to the upside. We said the USD index is likely to go to the upside like that, and then with that in mind, we were expecting to see Euro USD to go to the downside like that. So you can see that we are still yet to see this market to go down, but look at these spikes that are issued on the opposite direction. They are there to take out your stop losses, make you re-enter again and again up until you catch the trend. So if you catch a trend and you can hold that particular trade, you are good to go. So basically, the first step, as I've mentioned earlier, is to count levels. We are going to illustrate using pound against the dollar, and I am going to start on the higher time frame to see the overall bias of this particular asset. So we can see this was the high that was issued, and from that high we have this low that was also issued. So these two prices can give us an area of observation where the market may go, right? In trading, we always say may go, may occur, or might happen. Why? Because nothing is certain and nothing is guaranteed within this business. So in this particular case, we can actually start to plot our levels. As the first one to the downside, we can see the first impulse or the first drop, the first rally, creating this first lower high and this first lower low, and then that same market gave us a new lower high and a new lower low like this, and then the last one was also issued at this particular point, so that we can safely say that we had three levels to the upside, to the downside. So if we have three levels, the next thing is to anticipate what we call a peak formation low, and in this particular case we can anticipate to have that or to see that, which will be a multi-month W pattern like this. So this move is actually to give us a bias to follow, a bias that may help us to see where the market might go. We have a higher probability to see the market going down on this higher time frame and later to go up, probably at mid 2024. Maybe we can see the market start to go up. So all these are on probability. So to see what is happening, we have already built a bias, so that bias should tally with what we can see on the lower time frames, and moreover we will need to see a bias that is in line with the fundamentals, right? So recently we can see that the US dollar was actually strong in terms of all the releases that were being issued, and that means on pound against dollar we will see the market dropping. So we had the first rise like that, and then we had the second rise like that, meaning that we now have two levels to the upside and then the last level to the upside, which is this one. So we had three levels that were issued. So initially we wanted to see an M pattern, which is a multi-session M to be issued, where we have this first leg neckline and then the second leg. Unfortunately, the market did not give us that anticipated move where we will see the market come back to these highs. However, it actually went to this particular point. To check we need to now go on the H4 time frame to see how it occurred. On the H4 time frame, we can see as well three levels, which are 1, 2, and 3, and there was a moment of consolidation. So this moment of consolidation, if we go within it, that is where we start to look for the setup that I was talking about in the first part of this video. So we now have a bias. A bias is to go down, and if that bias is to go down, it means we are going to look for sales on the lower time frames. Going on the M15 time frame, what we now need to see will be a 3 move in opposition to the bias. By 3 move in opposition to the bias, it's actually also called swipes in opposition to the bias. So from this higher time frame peak formation high, we can see the first day was issued. On the first day, we should mark the low of the Asian session. That is where we start to count the 3 swipes against the bias. So in this particular case, we can see there was 1, 2, and 3, and in some cases you need to actually see this on M5 so that you can view it clearly, right? On the M5, this is how it looked like. We had a 1350 EMA cross, red and blue, then bounce on the 50, rise, bounce on the 50, and then the last level to the upside. Marking those levels, they will look like first one, then we had the second one, and then the last one, which is this one to the upside, like that. So after 3 levels within or against the opposite, against the bias that we have built, that is where we'll make our entry. So 3 levels against what we are expecting, that is what we are looking for. Going again on this day, there was no 3 move against the move that we are looking at. Then here there was no move against, and on this particular day, our low, our Asian session low, was at this particular point. Going on the M5 to clearly view, we could see that there was the first swipe to the high, like that. The second swipe to the high, like that, and then this last swipe to the high. So that is how you'd see, if you are patient enough to catch those highs that will be issued, or those high of days. So we can see that these were the valid points, or the most convenient points to make your entry using this particular trading methodology. So the first thing is basically to build the bias. Where is the market going, and how can you go around it so that you find these moves that opposes the bias and you enter at the helm of the situation. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.